Hey, my name's James Nicholson and welcome to my YouTube channel. The Bank of England have got their interest rate meeting next week and the governor has been doing the round in interviews and they've given some strong indications on where they feel interest rates are going. Now, this is interesting because it will give us some sort of guide on what to expect next week. Could we see interest rates finally drop again, or are they going to hold? Well, he's gone into detail in these interviews on what he is focusing on. It's not just inflation at the moment. There are other things that the Bank of England are keeping an eye on as well that are helping make their interest rate decisions. So in this video, we're going to talk about all of that and more. And if you're new around here and you haven't done, welcome to the channel. Do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 44,000 subscribers, which is crazy. Thanks to everyone that subscribes. And by subscribing, you'll get all the latest property news, house price news, interest rate news, property investing news, and much, much more. And let's get some views on this video. How do we do that? Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm, and that's really helped the channel grow. So thank you to everybody that does that. So the Bank of England will never, ever come out and say in an interview, we're going to cut rates, or we're going to cut rates 4 times further this year. The Federal Reserve, they do talk in such language. The Bank of England are a little bit more reserved and like to keep their cards close to their chest. But realistically, the Bank of England are always going to do what the Fed do. They're going to be fairly close to what the Federal Reserve do. Now, that's because we want to keep our currency fairly stable. And if we slash rates, the pound might get weaker. That means that then when we import stuff, it's going to be more expensive. So that's something that they've got to take into consideration. But Andrew Bailey's been doing a lot of interviews in the last few weeks, and that's normal for the governor of the Bank of England and other members of the monetary policy, the 9 members that make the decision on where interest rates do. You have to listen to what they say in interviews because they always hint and imply what they're expecting to happen over the next few months. And what they're saying is that rates are going to go down. That's good. That's really positive, and that's what we want to see. So Andrew Bailey is clear here. He's saying interest rates are going to drop in the UK. Now, that's good because there's tons of people that watch this channel that comment and say inflation is coming roaring back, and because of that, interest rates are going to go up. Well, they're definitely not going to go up. They're more likely to go down faster than Andrew Bailey is predicting if we hit a big recession. So what was the key to the last interest rate cut? Because they shared that, and it was quite interesting. So normally, the Bank of England's goal is to keep inflation under control. So, inflation has a target of 2%. Where did that come from? Well, if you study that and read up on it, go and look at some Wikipedia and Google posts about it, a guy just made that up. A guy just said, you know what, 2% sounds quite good. Let's try and keep inflation at 2%. So that's where everybody decided it should be. You probably might not believe me saying that. Go and have a Google and come back and comment below if you believe me after seeing it. That's how it was understood. Inflation, that sounds like a fairly stable number. Let's focus on that. And so that could be an average over a year. It can have ups and downs and be a little bumpy along the way, but they want a 2% target. That's where they want to get. But the last interest rate decision, Andrew Bailey said it wasn't about inflation. What it was about was jobs. And the outlook for jobs, the forecast for employment in the UK is not good. And so the monetary policy in the last meeting where they cut rates decided to do that based off the fact that they see unemployment rising and that causing more problems for the UK economy down the road. And so they decided to cut in order to make that impact on the jobs market a little bit less extreme, if that makes sense. So that was their goal in the last meeting. Now, what are they looking at now? Well, now there's a combo. Firstly, inflation. That is going up. And so that's likely that inflation will go up to nearer to 4%. Potentially with the Iran and Israel situation, that could be bad for inflation. Obviously, that war isn't great for the people involved, but for world economies, oil prices have gone up. They're probably going to stay up for a short period of time, and that could increase inflation on a short-term basis as well. So inflation is expected to go up close to 4% by the end of the year. The jobs market isn't very strong at the moment. That's expected to go down. So inflation going up would be less likely to have interest rate cuts. Jobs unemployment going up would mean more likely to have interest rate cuts. So they're going to balance it between those. And the last one that he spoke about is the tariffs. The tariffs are giving global economies so much uncertainty. You see, look, it might seem like it's far off in America, and we might feel like we've got some sort of deal in principle with America on certain things. I can't even recall what it is. It's like 20%, isn't it now, or 10% maybe, the tariff on goods from England, and it excludes Jaguars and Land Rovers and stuff like that, or a certain volume of those in a year. But the tariff war could cause a global slowdown, because let's just say an American company gets impacted, that sells to a Spanish company, that Spanish company gets impacted. Now a British company, all of their clients are this Spanish company that's now having a slowdown. Now the British company is going to slow down, and that will impact our economy. That will impact jobs in the UK as well. And so Andrew Bailey's saying this tariff war isn't good for the British economy either. Even if we have a deal agreed with America, our customers, the people that we sell to, they're impacted by this tariff war as well. And so that could cause a recession, and that would be another tick for interest rate cuts. And so these are the barometers that they're looking at. This is the stuff that they're looking at on a daily basis when they're making these decisions each and every month, when they have their meeting and they're talking about where to set monetary policy. Now, should they cut now? I think they should start cutting now, because when they cut, it takes months for that cut to be felt in the economy. You don't just see the Bank of England cut rates on August 1st and on August 2nd you're lined up ready to buy your new house or to get that new loan to buy equipment for your business. These decisions take time to filter into the economy. Or maybe you're on a tracker rate. It still takes months in order for that tracker rate to become active, to go through all the solicitor paperwork and to get that new mortgage deal on a fixed rate. And so they're acting really slow, and it seems like they're a bit too late. They've got a lot of kick on and abuse for raising the rates too quickly, but now I think they're cutting too quickly. And so next week, June 19th, is the next meeting, and the markets are predicting 100% hold at the moment. Unfortunately, they're talking about 100% hold, unless something drastically changes in the next week. We're not going to see a Bank of England cut in June. So it's good to know the factors that they're considering. The lesson from this is it's not all about inflation at the moment. They've said that verbally. I've heard them say that 2 or 3 times now. It's not just about inflation anymore. They are considering jobs, and they're also keeping an eye on how the tariff war impacts the global economy. Because if we go into recession, you'll see rate cuts very quickly. Let me know in the comments what you think below. Do smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.